Current science indicates that global warming beyond 1.5 degrees Celsius could have a catastrophic impact on the natural world and humanity. Switzerland and its financial sector are gearing up their efforts to transition to net zero greenhouse gas emissions by 2050. Welcome to Finance.Swiss. Today I speak to Christoph Baumann, Head of Sustainable Finance of the State Secretariat for International Finance, to learn more about the newly implemented transparency metrics. Why is it important to have a common standard for climate transparency?
Well, Switzerland and the Swiss financial market is very much committed of aligning the financial flows with the goals of the Paris Agreement, meaning of trying to limit global warming to 1.5 degrees above industrial levels. And for that, there is a huge transition in the real economy globally. And Switzerland, as the largest center for cross-border wealth management and as a huge reinsurance and insurance center, is ideally placed to support this global transition. But to do so effectively, you need a common language. You need to understand what does it mean to be climate aligned, and this understanding needs to be credible. And what credible to me means is it needs to be science-based, it needs to be forward-looking, and it needs to be comparable and easy to communicate to investors.
And just to better understand the Swiss climate scores, what indicators are included in the Swiss climate scores?
So obviously it would be the easiest to have only one indicator that's very easy to communicate, but we're dealing with 27 years forward-looking transition to 2050 when Switzerland has committed itself to be net zero. As such, it's not that easy, unfortunately. So we came up with 6 indicators grouped into one side into current state indicators, looking at what are the current state of companies, such as their current emissions and emission intensity, their current exposure towards fossil fuel activities, and forward-looking indicators. On the one hand, we show the percentage of companies in a portfolio that have committed science-based net zero targets. We look at the global warming potential, meaning if all the companies globally act with the same ambition as the companies in the portfolio, what would be the global warming resulting from that? And other indicators include the stewardship of the asset manager, so how do they utilize their power in their engagement with the companies? Also, do they have annual or multi-annual goals to reduce emissions in the portfolio?
So you mentioned these commitments. How can you verify if the commitments to net zero are adhered to? Is there a way to check back?
So there are 2 levels. On the one hand, all these indicators mentioned, they're obviously not Swiss inventions, they're very much international best practices. As such, they appear in multiple, on the one hand, regulations, but also in multiple standards, such as the TCFD recommendations. And so there's a global monitoring, so to say, on the quality of this data. On the other hand, the Swiss climate scores itself, they're voluntary, so it's a voluntary exercise. As such, there's no mechanism to verify that what financial institutes, how they use these scores, that it's perfectly adequate. However, the Swiss associations, AMAS and SSF, are currently working on templates to ensure a consistent and easy-to-use implementation of these scores, which I believe will reduce massively the risk of a non-coherent implementation.
How do you collaborate with companies and financial institutions in achieving a more sustainable financial center?
Well, I think there's 3 main areas of work we are focusing on. On the one hand, it's so important to have decision-ready sustainability data from the real economy. And decision-ready meaning that they can be utilized by the financial market to form their investment decisions. And we are working very closely also with the real economy on climate-related data, but also on nature-related data. When it comes to climate, we are currently doing a mandatory implementation of the Task Force for Climate-Related Financial Disclosure recommendations, which are the global standard for climate disclosures. We believe that they're absolutely instrumental for financial institutes then to act upon that. The second area is the net zero commitments of financial institutions. So there were many pledges around COP26 last year in Glasgow and many more this year. All the main associations in Switzerland are committed partners of these international alliances, and the Federal Council recommended to financial institutions to join them. So there's an ongoing dialogue with financial institutes. What does it mean to be part of there? How can we facilitate that more join these alliances? And how can we ensure credibility? And the third area, it's exactly what we just discussed. It's transparency on financial products.
Transparency is actually a good keyword because transparency has been an issue when it comes to sustainable finance. as there's no common metrics that have been established yet. There have been a few prominent cases of greenwashing investments lately, which also forced regulators to take a closer look at what financial institutions advertise as sustainable investments. So what are the challenges you're facing in making sure that transparency is given?
To start, I'm very much encouraged that there is an absolute common understanding in the financial market in Switzerland that greenwashing does not have a place in Switzerland. And all the associations have been very forward in their communication against greenwashing. So I think we are fighting a common goal. How can we combat greenwashing or avoid greenwashing in the market? To one degree, greenwashing is natural given that these days the market is much more sophisticated than 5 or 10 years ago. So I think 10 years ago, as soon as there was something to do with an environment or a social aspect or a governance aspect in a product, nobody would have doubted that's a sustainable investment. Today's investors, they want to know, well, how exactly is this aligned with sustainability goals? How exactly does this have an impact? And I think there lies the two main questions. A sustainable investment, to me, is one which either is aligned with a sustainability goal. For instance, you're invested in companies that have a credible net zero path, or it has an impact. The standard thing would be you're investing to ensure that there are more wind farms or more renewable energy, or you're investing into a product where the asset manager is actively trying to bring down emissions. So they might invest on purpose in browning companies, but through engagement and stewardship, they push down the emission path of these companies to a more green trajectory. However, what is not a sustainable investment to me is if you simply optimize your performance or your risk profile of your financial investment by reducing climate risks or biodiversity or any other sustainability risks. It has to do with sustainability because those are risk factors to your portfolio, but it's pure financial risk management you're doing, and it has not necessarily, or very much likely not, an effect on sustainability goals, and it might not be aligned with sustainability goals. And I think today that's still mixed up. So there's a clear need to clarify that, I would say.
Looking at sustainability as a financial risk, you might do anyway if you just want to.
It's a fiduciary duty. When you're managing somebody else or third-party assets, it's a fiduciary duty to minimize relevant risks. And I think it's a common consensus that that at least climate is a financial risk to a portfolio, which you need to assess.
When comparing to other financial centers, how does Switzerland differ?
We have a traditionally very market-based approach where we work very closely with the financial institutes and with other stakeholders like NGOs and universities as well before we act upon it from a regulatory perspective. And I think especially in the area of sustainability or sustainable finance, that's the right approach, and that continues to be the right approach because there's a huge amount of dynamics. So if we implemented regulation based on understanding 3-4 years ago, it would have been the wrong regulation. I'm very much convinced of that. So we work very closely with the industry, and we see in what areas is the market not able to efficiently reach the necessary steps, and there we step in then, as we do now with the TCFD regulation. So we are really trying to have a supportive role, and there it's a unique collaboration, I would say, compared to other financial markets. The other area, I believe, is that in Switzerland, all the main market players strive for the highest possible credibility. So when you come forward and you suggest actions to increase that credibility, you get a lot of support. And that, I think, is a very encouraging key feature of the Financial Center.
Christoph Baumann, thank you very much for sharing what you're working on with us. Thank you very much.
Thank you very much.